We've got a pretty decent lead for markets out this part of the world because of gains on Wall Street overnight. There's a look at the final scores. The Dow up about 0.7%. The S&P up more than 0.8. The NASDAQ more than 0.8% ahead as well. Let's get to Scott Redler, Chief Strategic Officer at T3Live.com, which does two things. Runs a hedge fund, one, but also two, a subscription-based virtual trading floor. He joins us live out of New York. Scott, good to see you. I know when you were back on CNBC last, your track record in terms of calling the market has been pretty good. Back in March, you said, look, time to go long. That proved right. Right now, though, you've turned bearish. Talk to us about why.
Well, we've seen a 5-month, multi-month move that there was a lot of opportunities, there was a lot of rotation, and what we do as technical traders, we try to manage the stocks and manage the positions, and when opportunities start to get a little less and get more risky, we try and look for technical signs of a composure change in the market. And as of the past few weeks, we saw some of the changes in composure that we kind of put out there for our T3 Live community. Okay, we saw the leadership take the rally from the start, and then 2 weeks ago, you saw all these high beta names start going nuts. You saw AIG, Fannie, Freddie, MBI. You saw a lot of highly speculative stocks that are the tail end of a move having big gains. As well as last week, we saw numerous pieces of data that were very positive that the market could have went up on, and the market did not. So that showed us true signs of fatigue, which put caution in the wind, where we had some of our trading community get out of some of their longs and actually get short for the sophisticated investors. Yeah,
listen, Scott, I mean, talking about fatigue in just the last couple of days, that group that led, that took the leadership position back in August, the financials, I mean, they rotated between diversified financials, banks, insurers, etc., but the whole lot of them now seems to be the trend the last 2-3 sessions or so are heading south all at the same time.
Well, on Tuesday, we saw a very potent down move in the financials. So what we need to see is what does that lead to. If you recall when we spoke, Karen, back a few weeks ago when Shanghai had its first down day, when it was down 4.4%, and it was a situation to take notice of, you have to see what it leads to, and that potent down move usually leads to another. So we're kind of in the camp right now where you need to be cautious. We're going to put together strategies for potential retracement zones in the S&P 500 and on the NASDAQ. So when they hit those zones, we could take a look at the leaders of the past rally, see how they're acting to see if we can continue into the fourth quarter of this year.
Scott, can you help us get to the bottom of the gold price? Because this really has been the story of the hour, even when it was looking a little bit boring. It's actually quite an exciting play right now, and it's risen really pretty close to the 1,000 level. Is it a safe haven play, or is it an inflation hedge? What's going on with gold?
Last December, we started talking about gold when it was about $850 an ounce, and that move from $850 to 1,000 was the safe haven play. Since then, we've consolidated in the upper end of the range from 900 to about 970, and in order for gold to really blast off and have the commodity-type parabolic move, it needs to turn into the inflation trade. So with the world markets recovering and all the money that's been pumped into the system, people are starting to smell inflation. And when inflation really kicks in, you're going to see this technical pattern ignite, which we're in the process of, that could yield a move in gold to probably $1,300 to $1,500 an ounce over the next 6 to 12 months.
In the meantime, we've got the non-farm payrolls number coming out, Scott, which could really lead the number either way. It could mean inflation does come back on the table as a trade, or it could be the virtual opposite. So how are you going to treat gold in the next 24 hours?
Well, I'd love to see gold kind of hang out right below the breakout price because we did just have a big 3-day move. So at this point, we're going to be watching. So if we could sit here for the next few days and then we blast through 1,000 next week, there is a cycle in gold that kicks in on September 9th. We're going to go after it because we think the first breakout move will be a potent one and will definitely reward investors or traders that are ready. And then at that particular point, I think over time, gold will get to that 13, 14, 1,500 an ounce. But that breakout trade is going to be very exciting, and you need to be prepared for it.
Okay, go long gold. All right, Scott, we're going to dig a little bit deeper into your playbook in just a bit. Scott Redler, Chief Strategic Officer, T3Live.com, live from over in New York.